Hi, I just wanted to come to you today to give you another tax tip for before the end of the year. If you are making money, and most of us have to make money to live, we got to pay our rent and our utilities and stuff, so we got to make money. But if you're going to make more than or owe more than $1,000 in taxes this year, you are required to make estimated tax payments. These tax payments must be paid as earned or received income during the year through either withholdings or through estimated tax payments. Individuals, when we say individuals, we're including sole proprietorship, partnership, S Corp shareholders. All of them have to make estimated tax payment if they expect to owe $1,000 or more on their return. Okay, but individuals who don't have to pay estimate taxes have to meet these three requirements. One, they can't owe any tax liability the prior year. Let's say they didn't owe taxes the prior year. So this year, they don't have to do estimated payments if they think that the tax payment is going to be about the same. Okay? Or if you are a U.S. citizen or resident alien for the whole part of the year, then you don't have to make estimated tax payment. But the prior tax year has to cover the whole year. So if last year you owed more than $1,000, then your estimated payment has to be at least 90% of what you owed last year. And we send those in every quarter. So you've got one that's coming up January 15th. So you have time to look at the whole year and see what you made this year and the deductions that you're able to deduct, how much is left. And based on that amount, you can go to irs.gov and look up the table and see how much taxes you will owe on your net profit or your bottom line. And then you'll see how much you're going to owe in taxes. And if that is more than $1,000, then you have to pay in estimated tax payment. You have time to review this and figure out what's there so that you're not penalized when you do your tax return for not making estimated tax payment. And once you get that in, if the standard deduction is raised this year and you sent in too much, then you'll get a refund. But don't get penalized for not being responsible and paying the taxes when it's due, because it's not due at the end of the year and it's not due on April 15. Your taxes is due as you earn it. So if you know that you have excess earnings, and you need a budget to figure this out. You can't just say, oh, I made $10,000, I'm going to spend all of it. And most of the time we do spend all of it, but what we spend it on is not deductible. So we're going to have a profit. So look at what you have, and I'm talking to individuals as well as business owners. You have to pay in estimated tax payment, and there is one that's coming up due January 15th. And that January 15th covers the remaining of 2024. Okay? So January 15, 2025, the tax payment is going to be due for the rest of 2024. So you have time to look at that, look at your income and your expenses, see what can be deducted, and then figure out a portion of the taxes. Or if you don't want to do that, look at your tax return for 2023 and see if you owe more than $1,000, and if so, at least paying 90% of what you owed last year. I hope this has been helpful to you. If you like this information, please click the like button below and be alerted when I put up more videos on tax tips to help you save on your taxes.